Welcome to the weekly swing low. It's March 29th, 2025, and we are resuming the downtrend on the weekly chart. Let's go through our tickers. We'll start with SPY. So it looks like we topped out in the daily cycle. We'll start with the daily chart, actually. So we had this big gap up on Monday, right? This big gap, right? Like, let me just actually draw where the gap is so you can see it pretty clearly. So a gap up, some positive news about tariffs, and then the next day, we made another slight higher high. That was day 8 of the daily cycle. And then on Wednesday, we came in and made a big lower low, closed below the low of this candle. Didn't close the gap yet. Thursday, we did close the gap. That was hopeful, right? Your bull case was that this gap fill was the little retracement that this thing needed, right? So maybe we're going to do something like this and then up and at them. But instead, the next day you got follow through to the downside, right? Big follow through. And so that is day 11. And it looks like that means Tuesday is your daily cycle high at day 8. And Monday would be day 12. And if you think about the weekly candle, we made a bearish outside weekly candle. And we talked about this in the last update. In order to have any kind of real low on the weekly chart, we needed to close above this high here. So we need to close above 569. And we actually got well above 569 at one point, hence the gap up. But then we had that big reversal, as we talked about. Once we had that reversal, there was a big chance that the weekly candle was going to become a bearish outside weekly candle, and that's exactly what we got. We closed below 557.38, which was a low from the previous week. So the next target is down here, like this low here, so at 548. And of course, it's only week 10, and weekly cycles. I mean, a really short weekly cycle would be like 16 weeks, which is what we got in what is that, like basically the middle of last year, right? Like we bottomed in the summer after a 16-week cycle. So maybe we get something like that, right? But that means you have at least another 3, 4, 5 weeks of downside. That's not a prediction, just an expectation. I mean, look at these cycles, right? That was 32 weeks. This was 24. That was 16. This was 23. So it's unlikely that we're going to bottom on week like 11 or week 12. There will be bounces, though, for sure. So just tactically speaking, at this point, any bounce to be taken seriously has to make a higher high above this low, above this high here. So that is above 566.27, which is a good distance from where we closed today, obviously. And so, which is another way of saying stocks have a lot to prove themselves to the upside. It's only day 11 of a daily cycle, and we've started the decline. Not a good sign. So that's a level that you want to look at. And the other thing I will call out, and we'll go through the other tickers, but it's all the same pattern, just in some cases it's more extreme. We've also made a bearish outside quarterly candle. So think about what happened with the weekly candle. Same thing happened. That turned the quarterly candle bearish. So remember, March closes the first quarterly candle. That's really important. The low from last quarter is 561.69. So we need to get back above that, in the coming months to start to see a longer term reversal. But this is exciting. It means that multi-month top that we've been talking about, this is it, right? Like it doesn't mean it's going to be something, it has to be something like this. Hopefully it's something that's more like this, right? Like a little 3 months of downside, a pause that kind of refreshes. But this is it, right? Below this low here. So below 580, which at this point is quite a bit up, like we'd have to rally quite a bit even to get back to there. That forms a swing high, just to be clear. Below here, right? Once we cross below the low of this candle here that marks the high, that is a monthly swing high. Important level to be aware of. So that is SPY. And the other thing that I would call out that is sort of worth mentioning in terms of like levels is that this candle, this monthly candle here, best case scenario, we're going to have to work through the range of this candle, right? And the high of this monthly candle is 595. So a lot of room for price discovery to happen before stocks can prove themselves that they're back into an uptrend. So that's SPY. Let's walk through the other tickers. Again, they're all showing a very similar pattern, albeit different levels. So if you look at the Qs, same idea, but it's very close to having made that lower low already. SPY has a little bit more room. So for Qs, we're expecting it to break down below 465.74. So not that much, not a lot of distance from where we are now. So another way of saying QQQ is weaker than SPY right now. And you can see that in this ratio chart, right? This is a ratio chart of QQQ to SPY. Look at what it's doing on the weekly. It's making lower lows. It's in weekly cycle decline. For Qs, going back to Qs real quick, same pattern, bearish outside candle on the weekly. That's with a close below 471.71. That's an interesting number. Again, same pattern. I'll actually go back to the daily chart again. I think this is important to see. And as you get more experience, more screen time, you'll start to see this. We talked about this. And again, this is the same pattern for the other tickers as well. We had this consolidation, right? 1, 2, 3, 4, 5 days of sideways, right? Like just in this up and down. You had these wicks. And then you have this crazy gap up. It's like, oh man, hard to be short after a gap up like that, right? So, which is to say, this consolidation broke to the upside. And then it's like, oh wow, off to the races. But there's a catch. This is what you would call your classic quote unquote false breakout, right? You have this consolidation and then it breaks to the upside. So everyone's like, oh man, I gotta get on the right side of this. And then wham, you get your swing. So which is to say, there is a lot of fuel for downside because a lot of people would have been positioned for this breakout, the breakout of this, because this is a little bull flag basically, right? And then you get this gap up. So you have traders chasing. It's just a situation that's kind of ripe for more downside. Again, same pattern with the Qs, same kind of consolidation, and then a break up with the gap up. What about the Dow? So for Qs, that level that we want to see is a break above 580.52 on the daily chart. Let's zoom in a little bit to give folks some hope, right? So you got a little bear flag here on the hourly chart. So price has to break above 470.40. That's this level. Let's call it this cluster here. If price can break above this cluster here on the hourly chart, then that's your first kind of sign that we might be able to make something happen. And so that's the Qs. Let's move on to the Dow. So for the Dow, that cluster on the hourly chart is a break above 416. So you really have to see that first. Let's just go back to SPY really quickly. So for SPY, that cluster is above 557. Again, those are your first signs that things are going, like, we're just trying to start an uptrend, maybe a relief bounce at the very least. This is the Qs on the weekly. So notice, different pattern with this one. It did not make the bearish outside candle yet. It would have had to close below the low of this candle here, which is 414. I suspect it's going to get dragged down with the other indices, so there's more downside to come here. But this is a great example. Just like look at this visually. This is a great example of a candle that hasn't turned into a bearish outside candle yet, but it's like right on the verge. Okay, so that's the Dow. And then you look at the ratio. So the Dow is starting to outperform SPY. So the Dow versus SPY ratio, look at that. On the weekly chart, we're in an uptrend. That's bad news for the market. Generally, that's a risk-off posture, not something that we want to see. And on the monthly chart, we're green, whereas we know everything else is red on the in absolute terms. Not a great sign. What about IWM? So IWM, we expect a move below 196.56. And it already made its bearish outside weekly candle, so showing weakness just like SPY and QQQ. And for IWM, that cluster exists below $200.71. Call it in that level. So it has to break above that for any near-term upside. And for IWM, remember, we actually topped out for this one back in November. So we've been in a swing high since then. And so it's about 4 months into this longer term decline, whereas SPY and QQQ are only on month 1. So that's IWM. What about SMH? SMH was the first thing to go bearish outside candle. I mean, look how far below the low it closed. So the low it needed to close below to make a bearish outside candle was 221.41. And we actually closed at 212. Wow. So like, so this thing is leading to the downside. It's already made that lower low below that daily pivot, the one that's a target for most other indices. So for this guy, got to get above that cluster at 213.53. And remember, if we're going to go lower, we're probably going to get a little upside first, the same way we got that little breakout from that cluster. So if you're looking to be aggressive and short, I would wait for a little rally, and then you want to catch the swing high. All right, so for Dixie, so Dixie looks like it's trying to bottom. You know, you got this low here on week 25, but then we have this this red shooter. A close below 103 spot 84 next week means we're declining on the weekly chart. And on the daily, yeah, we got a red shooter as well. It's trying to form well, it actually closes a swing high. So as long as it stays below 104 spot 18, we have a daily swing high and potential daily cycle decline. Yields. So yields look like they are moving lower. And so we have this attempted bottom here on week 24, but then all we have is consolidation since then. So week 25, 26, now week 27, a red shooter. A close next week below 4 spot 25 tells you this thing is still declining on the weekly chart. And that means TLT should be working. So TLT had a nice little gap up. Looks like a daily cycle. Looks like it's leaving a daily cycle low behind here. I will caution though, this thing is notorious for filling gaps, like most things fill gaps. So be careful. There's a nice size gap here. Probably a better entry is to wait for the back test. And that gap is below 89.81 and 89.03. That's TLT. And on the weekly, we have a potential weekly cycle high here on week 7, but as yields look like they're ready to roll over, this is starting to look like just consolidation, and this could become a higher low. So that's a low at 88.63. That could become your risk point. Anything below that tells you this thing is in weekly cycle decline. But above that zone, I should say, this becomes just a potential staging ground, right, for something like this. Doop, doop. And if stocks are going to pull back, and I think a lot of this stuff is on recession fears, you would expect that TLT is going to rally, that yields are going to go lower. People tend to buy bonds if they're expecting a recession. So that's TLT. TBT is going to be doing the opposite. And so for that one, you want to see it if you're going to have a bullish reversal, we have to see a close below 34.75. Let's move on to crypto, and then we'll do precious metals and close this out. So crypto is not looking great here, forming a red shooter on the weekly chart. This thing will close on the weekly candle in a couple of days. At this point, anything below 81.608 is bearish. That becomes your kind of line in the sand. To keep it simple, for ETH, oh my goodness, yikes. Anything below, call it in the 1800 area, we're right now just right below it. At this point, these things are, I wouldn't touch them, right? Like there's nothing to do here but wait for a reversal. Look at the way this thing is careening lower on the monthly chart. Yikes. So that's ETH, that's crypto, not looking great. What about gold? Gold continues to move. So gold is on what day is it? It's day 20. Wow. So we're getting late in the daily cycle. And on the weekly cycle, more importantly, it is week 12. So not super late. So I think this thing could still run for a few more weeks pretty easily. It's a little scary to chase it up here. But your low on Friday was 3,054. That could be a risk point for you. Silver had a red day, and that gives you your stop, right? Like so something around 33.90 gives you your stop on silver to try to get in on this trade. Same count as gold, week 12. GDX, same count as gold and silver. It's week 12. For GDX, you want to see this thing stay above 44.92 in that area. And finally, let's talk about natural gas. It made a nice little swing low on Friday, a nice little hammer candle. So what you want to see on next week is a close above 4.08. That would leave behind a weekly swing low, right? You'd have something that looks like this. Now, with the market pulling back in general, it's a little dicey. But if one is inclined to take on the risk, you could go long here. So that's the update. Thanks for watching.